So, Robert, you look at this, and the market seems to be much more in favor the last month and a half of some of these recovery and reopening trades, and it's doing it without any confirmation on stimulus. Does this tell us, in your opinion, that stimulus is baked into the market, or that maybe we don't need it as much as we thought for some of these stocks?
Well, no, we need it, I think, Oliver, to your point, for these stocks to continue to move higher. But I think, you and I have both been doing this for a long time. If you're waiting for the stimulus to come out, if you're waiting for all the good news to be out there, that's already going to be priced in the market. And how many times have we seen the buy on the rumor, sell on the news? My thought's going to be a lot of that, like you said, is being priced in. You even look today, some of the real dogs, the cruise line stocks, the casino stocks, those are starting to catch a bid today. So I think people are just trying to get themselves ahead of this, but I wouldn't wait too long. But if you don't get something done, you'll probably start to see this unwind as well.
Now, does that mean we have to do this like checklist whenever the deal comes out and make sure all the things that are getting priced in here actually make sense? I mean, airlines up 4% after some of these companies said their capacity was halved and they don't see it getting back to full for a couple years. If there's not a bailout that's coming within the next couple months, are people going to run for the hills on these companies?
Yeah, I mean, I think so. I mean, the airlines in particular, I mean, those companies need a bailout just to remain solvent. And that's one of the challenges. We saw that in 08, 09. A lot of these people that are chasing after these stocks, remember, this is a common stock. It's not a bond. Just think about General Motors. What happened to those shareholders? Even though the stock's still trading today, those original shareholders were wiped out. So that's a very, very speculative game to try to play there. I get it if you're trying to trade, and catch a few points. But as a long-term investor, those airline stocks are something I would not be heading into.
Okay, so you're steering clear of these kind of high beta reopening trades, but there's risk on the other end, right? And this is what we talk about with a lot of our guests, is that we've seen over the last month and a half too, some of the appetite, it seems, is waning a little bit for paying up for extreme growth in this market in tech. Do you look at some of that softness as a sign of more weakness to come, or a very seldom rare dip to buy?
Yeah, I mean, I think long-term, Oliver, you've got to buy the dip on technology. Obviously, there's some really, really highly priced names out there, but at the end of the day, that's where all the growth is going to be in the future. And I think one of the things that we're seeing, you talk about travel and you talk about the airlines, I think a lot of that travel, especially when you look at the profitability of business travel for those airlines, is not coming back. We're spending so much time today on Zoom meetings with our clients, in other meetings with other advisors. A lot of that travel is not going to be coming back. That's being facilitated by things like Zoom, by things like CrowdStrike. So even those might be a little bit high right now, I still think as part of your barbell approach in your portfolio, owning some of the tried and true industrials that are paying those good dividends, but picking up names like Zoom, like CrowdStrike, DocuSign, those are the names of the future. That's the economy of the future, and I think you have to gravitate towards those on any pullback.
Now, to what extent? I mean, we've seen in the past, it didn't matter what price you paid for Amazon, Apple, any of the mega cap giants, any of the cloud names. But we've seen a few blowups also the last week. We saw a high growth cloud company in Fastly that just got slammed on a small revenue miss. We saw Netflix get punished after its earnings, and it's slipping a little bit again today as well. How do you either hedge for these companies? Do you have to have some offsetting force if you are piled into big tech? Or do you just say, what, forget it. I'm not going to, worry about a stock that hasn't done me wrong for a decade?
Yeah, well, I think it comes down to positioning size, right? I mean, you can't put in a position to where if it pulls back 10, 15, 20%, which a lot of these names you have to expect are going to do, are going to wipe you out. You brought up Amazon. That's a stock I've owned since about 2002. I've seen that stock pull back 30, 40% so many times, but I believed in the long-term story. I believed in what Amazon was doing and what you're starting to see today. So you have to stick those kinds of names in your portfolio and forget about them. But, some of these, I would say Netflix in particular, I've always, and I've been wrong about Netflix, have really wondered what's the next lever that Reed Hastings is going to pull. And if it is just a media company, and I haven't seen anything different than that, you have to look at that something like a Disney. And if you put anywhere nearly close to a Disney multiple on Netflix, that stock heads much, much lower. Total addressable market is getting stretched on that. I worry about a stock like that. When you look at things like Zoom, CrowdStrike, in my view, there's still a lot of opportunity. Valuations are very high on both of them, but I think those are the types of names you have to play.
Okay, so you like some of the more higher growth, also bigger winners here than maybe some of the legacy growth names. You've got one pick here that I definitely want to get an explanation for the viewers, because I haven't seen this one a lot. This is pretty interesting. You've got a company, ticker FTCH. Farfetch. This is connections to e-commerce, digital sales, a little bit of fashion mixed into it. Pretty interesting. Big move on the year. How come I don't hear more about this company?
Well, that's why I wanted to bring it to you, Oliver. You know, and I come on these things, I try to bring some names that not everybody's talking about. That's not one I haven't heard much about. So Farfetch, full disclosure, my clients own it, I own personally, and I just bought some common projects through their app this morning. So let me tell you the interesting thing about this. They're primarily in high fashion, luxury goods. They own a streetwear brand called Off-White, which is extremely profitable and popular right now at millennials. This is a $300 billion market. Only about 12% of that is online right now. McKinsey's done some numbers to say that that's going to get to about 25% in the next 5 years. These guys, unlike Amazon, you don't have to really worry about the counterfeit goods and the challenges we've seen with buying luxury goods online, because they have direct relationships with the manufacturers, decent prices on there. This is something I think is really under the radar. Like you mentioned, a lot of people are not playing. I see this as being the next Amazon of luxury goods.
Now, they had a nice rally after the last earnings. Stock price is trying to work its way back up to the summer highs following that report. We got about another month until the next update on earnings. Is this a company that is outside of the demographic that needs checks to go week to week to pay the rent right now? Or do you need to see also an injection into the economy for the e-commerce side of this business to work?
Well, it's an interesting question. I mean, they have $800 hoodies on there, so it's definitely not extremely cheap. That being said, the millennial generation, Oliver, they're stretching, and these are people that might not be making that much money, but they will buy that $800 hoodie. So I think for a section of their consumer, you do need to see that stimulus for this stock really to take off. But in general, they're not nearly as dependent on that as something like Kohl's, for example.